Good evening, everyone. Time for another silver update. This is the weekly chart of silver provided by netdania.com. You can click on the link below. Now I'm going to deal mainly with the topic of viewer questions, criticisms, comments, etc. And I've been receiving quite a bit of heat lately about my calls, quote unquote, for silver. Now I don't recall making any calls recently. The last call that I made, if you remember, was back in the summer of last year. Pretty disastrous call because I expected silver to reach triple digits by the end of the year, and that was obviously well off. So that's pretty much the last call that I made as far as a price prediction. I try not to make price predictions because really no one knows where the price is going to go. Now, ultimately, in the long term, I think that most of the silver stackers are people who are stacking based on the fundamentals, and I'm going to review those briefly in a second. But I think that a lot of the people who get upset about the calls, which really aren't calls that I've made, but about my coverage of the price action, are probably going to be traders. Now, I don't recommend trading the silver market. You can if you want to. I guess if you had a very large stack of physical silver and you also had diversified investments in other things, and I guess you wanted to gamble, this could be a very good market to do so if you're interested in volatility. You can see these violent ups and downs and ups and downs and back and forth could be very profitable for somebody who's a very good technical trader. Now, it's not going to be easy to get in. It's probably very likely you would be whipsawed. You can see with these moves, when you have these type of drastic moves that occur very quickly, for one thing, if you're running sell stops that enter you into your positions, if you're using technical indicators beneath the market and you were trying to sell and catch this down wave, you could have very likely had your stop run way down and been filled a lot lower, and then you could have been whipsawed down in here. So it's very difficult to trade these markets that move very fast to the upside and to the downside. The floor always has the advantage, so I never recommend doing that. Of course, I recommend stacking, and the reason why I cover the price action and volume action is because the main thing we're looking for, if we really believe in the long-term fundamentals for silver, is we're looking for an entry point for stacking, which is buying the dips. Now, there have been a lot of great dips. I've gone over the past of the dips that I've been involved in. Excuse me. And I've covered that. I've mentioned my purchases. Probably my biggest purchase on a dip was back in the fall of 2008, the bottom of the financial crisis, and I really felt when silver hit 850 it was a load the boat type scenario. It was kind of an end of the world scenario for a lot of people, but I just couldn't see how silver was gonna be worth less than $8.50 an ounce. Now, there have been other positions, other places that I've added. This place right here, I added to my position. I did not add to my position at all through this or through this. Actually, no, I bought a few coins here, a very small amount. And then when we got near this 26 point, that's when I pulled the trigger on some elephants. That was the last trade that I made. I completely missed this, and I haven't traded since. So I really like to buy on panicky silver crashes, and if you haven't seen one of those, then you haven't been in the silver market long enough. If you've been in the silver market as long as I have, you know that there are always going to be panicky, crazy silver crashes. And that's when you're going to start to get a real itchy trigger finger, and you're going to get to the point where you just can't not buy. That's the way you trade silver. You stack the physical on huge sell-offs, and that strategy has always proven to be a successful strategy for me. And let me tell you, I have been in the markets for a very long time. I have been a registered Series 3 commodity broker. Didn't like the business because it was about blowing up customers. I've been a registered Series 7 stockbroker. Didn't like that business because it was about churning and burning and blowing up accounts. So I know that end of the business. I have quite a bit of experience in that. And I can tell you honestly, trading in my own book and trading for others, I have made some money. I've also played a lot of options. I've made some money, I've lost some money, but overall it's pretty much been a wash, and I consider myself a fairly decent trader, although I have a little bit of trouble controlling the emotional reactions, and that definitely impacts my trading. So I'm an average trader at best, but I can say that this silver market, which is a market that I have purchased because of the fundamentals strictly. Technicals simply provide an entry point. This has been definitely my most successful investment I've ever made in my life. So I think that we're tremendously undervalued at this point. I think that at $32 today, we're probably as undervalued as we were at 17 or 18 back here, and $8 back here. As far as the value to inflation, I don't think we've even risen. I think we're probably still 90% below our inflation adjusted high if we had accurate numbers. So the key to trading this market is understanding the supply and demand and buying the dips. Now, the supply and demand, I mentioned I wanted to get into that real quick. You have 4 pieces of information you need to look at when you're looking at supply and demand for the silver market. You have the supply of silver and the demand of silver, and you have the supply of dollars and the demand of dollars. So as far as the supply of silver, we know that the supply of silver is not rising nearly as rapidly as the demand for silver. The supply is just slowly creeping up, and you know, you've heard the figures, roughly 70% of the silver is mined as a byproduct of other base metals, so it's not likely that the supply will rise very dramatically without either a tremendous increase in price or a tremendous economic boom that causes the base metals to rise. And I don't foresee that happening very quickly. Now, the demand for silver is growing really fast. The numbers last year for the Silver Eagle, last year was the first year where we surpassed the amount of silver mined in the U.S. As far as that which was invested in Silver Eagles. So we crossed that line. That's a very important line. That means the United States has to import silver to make Silver Eagles. So that's very important. Now, the supply and demand of money. The supply of money is absolutely through the roof. It doesn't matter which indicator you look at. I've covered a ton of the indicators. The supply of money is absolutely exploding. A lot of it has been funneled into the banks, and it has been locked up there in a sense, but you know that eventually money is going to try to find a return. And still, as of today, I think silver's up about 16 to 20% for the year, so silver's one of the best returns. So, and then the demand for money, I think the demand for money is high. The demand for dollars is high because of the type of risk trades and the rush to safety, into whether it's into treasuries or into dollars. I think that's going to change. The Fed has successfully masked the inflation rate so far, but really if you stuff a bunch of dollars into your mattress, over the long haul you're going to lose. You're going to lose a large percent every year. So both the supply and demand for silver are bullish for silver, and the supply and demand for money are bullish for silver. So the fundamentals mean that you need to keep stacking silver. Nothing has changed as far as that supply and demand picture. So let's jump over to the user or viewer questions. I'm trying to keep up with these. There's a number of them. Now you can see the ones in dark blue. There's a couple I clicked on, but for the most part, if they're in dark blue, that's a link I haven't clicked on. So I'm just going to go through these real quick. I have not viewed these, and if it's a question I can't answer, I'm just going to pass, and we'll just take them one at a time. So this one is, what quantities do you purchase? I've taken your advice on the slightly higher priced numismatic valued coins, such as the Wildlife Series maples. I told a guy at work buy cougars and moose maples, so he buys 2 monster boxes of cougars and a monster box of moose. What is your average purchase of these type of coins? Well, I'm not going to give that away because I don't really want to talk about the size. But I will say that when it comes to APMEX, I try to at least buy 100 to get that discount. If not, usually it's 100 or more gets the best price on APMEX and Gainesville as well. And then if you do the bank wire, which is really not that hard, my bank account's at Chase, but a lot of the banks you can set up a bank wire for free. So if you wire your money over there and you buy more than 100 coins, you're going to get the best price. This guy here who got 2 monster boxes of cougars and a monster box of moose, if he did that just recently, I don't think this guy's got anything to worry about. I think he can just stick those wherever he's going to put them and just not even look at them again for a number of years, and he's got a fantastic investment. There's only 1 million of each of those, and they're just, I can't say enough about those RCM coins. They're also 4 nines. So next question. The leasing of gold. I see all these stories on gold leasing. What is that all about? Why would anyone lease gold? Well, the a big accusation against gold is that it has no return. And so the big criticism that the financial press, who obviously are trying to hawk a bunch of financial products, they love to bash gold because although it is an appreciating asset, it has no return. Well, let's look at stocks. How many stocks actually pay a dividend? A handful. Apple Computer, does that pay a dividend? I don't know. But most of your stocks out there don't pay a dividend anymore anyway. So the same argument that is made about gold could also be made about stocks and many other things. They don't pay any return. You're just looking for capital gains. Now, gold leasing is actually a return on gold. It's just loaning gold to somebody and them paying you an interest rate for that gold. Whether they sell it and take the cash and invest it somewhere else, or whatever they do with it, they owe you back the gold and they are trying to make a return above that interest rate. So that makes perfect sense because gold is money. So if dollars have an interest rate on them, why wouldn't gold? So gold leasing is a story I covered recently, and especially it was the story I did on the bullion banks. And gold leasing has rates you can find, and there's silver lease rates that you can find. My big question in that video is, if they're leasing silver, where are they getting the silver? Because the central banks don't have any. So that's that issue. Swiss wants its gold, got tungsten. Hello all, thank you Brother John for the excellent replies to our postings. They're most informative. Just came across an article on King World claiming that Swiss want their gold repatriated. Brings an old article to mind. I read where China received a high caliber gold bars that were tungsten core a few years back. Apparently a large amount of these gold bars were created during the Clinton-Rubin years. Have you come across any information in the past as to the resolution of the Chinese tungsten bars? I would suspect that these may exist in vast quantities and central banks and are leased out with the ultimate purpose of further driving down the price of gold. I've talked about that a little bit before. Now, I don't think that the Chinese if they actually did get tungsten filled bars, are going to talk a lot about it. But I remember reading at the time that the Chinese had decided that from that point on they were going to assay every bar they received. It's really not that difficult to assay something now with the scientific knowledge that we have. In the past, you had to drill it, and I don't really think you need to do that now. You can see what amount of volume is displaced. You can do a simple test in water. You can compare that to the weight and use the specific atomic gravity, and that will tell you what it's made of. Now, obviously, if you had a very, very sophisticated operation that balanced in tungsten and something else that balanced that out on the other side, you could probably make a perfect gold bar that had the exact displacement, and so you may still have to drill. I can't say for sure on either of those issues. I will say this though, the reason why I have always recommended that you buy coins, whether it be gold or silver, is that the coins, if they're a high quality numismatic, a country mint, they're very difficult to counterfeit, first of all because of the quality, and also you have things like the fish testers that are made specifically for these that are pretty much can't be fooled. So I recommend that you stay with the 1 ounce coins and from the major mints, and you probably can't do better than that, so that's my recommendation. And the next one is employment statistics. We're averaging around 350,000 new unemployment claims per week, and we gained 227,000 jobs last month. How can this jobs report possibly be interpreted as good news for the economy? Lol. Well, I've covered that in a number of videos. We know that the number of employed is still falling. We know that the tax revenues are still dropping. So ultimately, the unemployment numbers, and that's new claims per week, that's the least important unemployment figure that's reported. If you really want to know the unemployment picture, you need to look at income tax revenues at the state level. I think I saw a story today that income tax revenues at the state level in the state of California, I think it was Charles Biederman of TrimTabs reported, are down 12% year over year. So those are the real numbers. The new unemployment claims are the phony numbers. They're the ones they can cook. I don't pay any attention to those numbers. And in the end, when it comes to the point of this current monetary system ending and a new system being implemented, say the Amero, do the numismatic coins really have any higher value than any other coin, round, or bar of silver? Also, when it comes to a point where silver goes parabolic, are there still going to be people willing to buy it? I can picture a situation where local shops will just say no when a person comes to dump all their silver for cash. What are your thoughts? Well, I've always recommended the numismatics if they can be purchased for a small amount above spot, maybe $1 or so higher than what the Eagles can be purchased for. I usually recommend Perth Mint or the Royal Canadian Mint. And again, the reason why I recommend those is from my past experience. I showed you on the silver chart the prices I purchased at, and I pointed out that I purchased at this 25 point here, or 26, where we dropped right there. I think I purchased, I'm trying to remember, so don't quote me on this, but I think I purchased some Perth Mint issues that are now out of stock. And I'm trying to remember which those were. It was either the koalas or the tigers. I think it was the tigers, the 2010 tigers that they still had in stock. Now, those absolutely exploded in price. I believe I actually paid a $5 premium on those, which is quite a bit larger than I like to, but I could see that they were running out really fast, and I took the opportunity to buy those. So I really like buying numismatic coins on the dip, especially numismatics that are running out. Anybody who purchased the Wolf series got a really good deal. And the reason why I recommend them, I've gone over these reasons a number of times, but another really important reason is that you are much less tempted to be shaken out because you can go and look on eBay and see the coin that you bought going for 50 bucks. A lot of these coins go regularly for 50 bucks or more on eBay, and that's just because they're rare and you've gotten the last ones that are out there, and they never really come back. The 2007 koalas came back at 70, 80 plus dollars. The 2010 tigers came back at 90 plus dollars. So once those go out, you're not going to see them again, and that's just another reason to stack those coins. And the next question is swaps. First of all, thank you for your efforts on our behalf. You're a fine example of selflessness for all of us. I have been doing some swaps with a well-known 500-ounce minimum dealer you mention on occasion. I've swapped one 2010 ASE MB for 2 mint boxes. I'm not sure what that is. Of 25 times 10 ounce 2011 Kooks. I know the short run I could have added ounces, but in the long run, after considering your comments, I feel it was worth the investment. Previously, I swapped a monster box of 2010 ASE plus 500 for a sealed monster box of the RCM Wolves. Worked out great, and I just did the same for 2 monster boxes of 2010 ASE plus 1500 for 2 sealed monster box of Moose. What are your feelings about swapping Eagles for Numi type coins? I'm short on cash and refuse to buy 1 or 2 tubes at a time. I'm saving for a few monster boxes of ASE for the next release. Wildlife series or Kooks, and would love your views on swap upgrades. Also, do you think owning foreign coins would be a protection from confiscation? I also have hundreds of 10-ounce bars and 1-ounce rounds, but have been trading Eagles as I get a higher trading value, thus use less cash. Thanks for everything and raising the bar. Wow. So this guy's a pretty big player here. He's swapping monster boxes, and that's not something I've explored. I have the real problem of falling in love with whatever I buy, and I really don't want to part with it. I had the idea of forming a business and buying the numismatics at a low price, and then selling them on eBay and rolling into new numismatics and continually rolling that over, and that kind of fell through because I'm just not willing to part with anything I buy. So good luck to this gentleman. I think that if you're swapping out Eagles for RCM or Perth at a decent price, you probably have made a good deal. I've heard recent reports that the Eagles have come out very poorly. There have been some reports of very poor stamping, and some of the comments have said that the U.S. Mint is one of the worst mints out there. I don't know. As I've mentioned in the threads where I commented, the last time I bought Eagles was in 2008, and so I haven't really bought an Eagle since then. I haven't been able to assess the quality. Most of my Eagles are between 1999 and 2008, so I really can't comment on that. And we'll take one last comment. Shorting the US dollar. With all the action around the globe, such as Iran, China, Russia, and others positioning to do business without using the US dollar, and Iceland looking into linking to the Canadian dollar, there appears to be a great possibility that the US dollar will significantly drop lower. The possibility of it crashing through long-term support of 72 and possibly dropping to 60 to 62 seems to be on the table. What would be good vehicle to use to short the US dollar in your opinion? Wow, that's a big question. So that's going to be very difficult to say. I would probably say if I had to choose, I would look at the swaps, I'm sorry, the crosses, and let's actually go to cross rates. And there's two that I would look at. I would look at the Hong Kong dollar, but specifically I would look at the Chinese yuan. And if you do the US CNY chart, you can see that pretty much the trend for a number of years has been a decline in the value of the US dollar. Pretty steady. We're just coming up. We've actually had one of the few rallies we've ever had in the dollar against the Chinese currency. I think that I don't have any doubt that the Chinese currency is going to at least go to 1-to-1 with the US dollar, and that's going to be a 600% move from where we are right now. I have heard that you can open a bank account in Hong Kong and that you can purchase bonds denominated in Chinese currency. That is going to be a win-win, because you're going to have an interest rate that I think will probably increase as they try to fight off inflation, and you're going to be paid interest in a currency that is appreciating. So I would probably say that if you're a big player and have the financial wherewithal to open a Hong Kong account, that probably your best bet against the US dollar is going to be a Chinese debt instrument that pays off in the Chinese currency, and just add to that position until we reach that 1-to-1 Chinese US dollar ratio. So that's my viewer questions answered. I wish I had more time. Like I said, with the silver price, I'm not really interested in making predictions at this time. If I see something really significant in the technicals, I may make a price prediction, but generally I'm trying to cover these technicals to give you a stacking point, and I don't know if this 31.6 is going to be any type of bottom. As I said in my last video, the volume indicators have now become very suspect. I really don't know how to rely on those, so I'm reassessing that. But 31.5 probably was a very good price. I personally am looking for a chance to pick up some moose below $30. I don't know if I'm going to get that, but silver has a way of giving you gifts by crashing to very, very low prices and then recovering very rapidly. So I'm certainly looking for a very rapid decline. Where that comes from, I can't say, but if it is rapid enough and steep enough, then I may get an itchy trigger finger and decide to pull the trigger. And we'll talk to you next time.